we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The other thing, there's a dynamic that's happened in the markets. I haven't been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that's helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone. You know,
but isn't that a good thing though? Because you have more liquidity.
No, it's a very good thing.
Yeah.
It's a very good thing. And you know, and the fractional shares is given access to markets. Welcome everyone to the Kindle Report. Wow, what a day, huh? Look for some weakness, and I told you what the key number to watch was yesterday, which was that 44.94 level. There was a 96 number. Those of you that have the indicators, if you had the fib targets on, there was a pivot right at 44.96. Took that out, and we went right to the numbers that we talked about. In fact, we went right to STX, and I'll cover all the details here in a minute in the technicals, but pretty interesting day. And during the day, I would tell you that it was obvious that we were going to get a bounce around that 44.50 level. We printed 47, and boy, did it. It was a decent looking bounce. But there's a lot of work to be done. I think one of the most frustrating things that I have to deal with doing the broadcast at 6 o'clock instead of 9 o'clock is I don't have the benefit of having the database output. And I'll show you tonight. It would have been very, very useful. And those of you that have WaveTech, then you know what this is about. And so you saw the numbers, and I'll go through those details here in a minute. One of the things that was interesting, it looks like markets are starting to believe that they're going to raise rates again. All of a sudden, this ISM number coming in a little hotter than expected at 54.2, and then there was the price index coming at 58.9. All of a sudden, my title on my video yesterday is inflation basically coming back, and the answer is maybe. And then we see another bid in crude oil again. But as I told you, we're getting close to the climax on the crude, and like these are all things I'll cover here in a minute. But we saw that ISM number. Certainly the algos picked up on it, and they ran with it in a big way. We saw a lot of selling coming in, and for hours the algos were running the show. And those of you who've been in the live room, there's some very interesting things that happen in the order book when these things are going on. I wish I could. I'll have to see if I can catch one of these and record them and maybe play a clip from live markets looking at order book so you can see exactly what goes on in these periods of time. But I saw something at the lows today which was significant, is the liquidity just went, there was no liquidity. The bids and the offers just thinned out completely. And when you see that, if you have the option of seeing the order book on a level 2, you know that all of a sudden there's no conviction on either side of the market, and that's when things start to change. And we did that right around 44.50, 44, right at the lows at 47. I was actually talking to a friend on the phone, and I said, man, this thing just dried up just now, looking for a rebound. Thought we could get back into the 70 handle, and we did from there. So it was a decent rebound, nothing earth-shocking reversal or anything like that, but those things happened. I'm just looking at some of my notes here. We're really cementing in this idea that we're going to get another raise in rates. And the headline I put out tonight, Fed to raise rates again, but does it matter? Will it affect the markets? Are they going to break something? Is that story coming back into play? And I think what we just saw today was the extreme. Just like when we printed 43.50, what was it, 7 or 8 days ago, that market just kind of the air went out, and then we got a rebound. We're going to have to watch these numbers, and I'll cover this in the technicals really close on what's likely to happen. We got a short week, so tomorrow's Thursday, and we'll see what kind of rebound we get. Economic stuff coming out tomorrow is claims, 233 claims expected. Continuing claims were at 1.725. Those upticked a little bit, but markets aren't really paying much attention to these numbers. And I think one of the things that keeps coming back to haunt the bears anyway is that somehow this employment thing just keeps popping back up, and we keep getting good metrics. So we'll see what happens. Yesterday also, a couple of things I didn't mention. Mortgage apps were down 2.9%, and services came in a little softer on the S&P services number at 50. We expected around 51, right at neutral, we'll call it, as far as these PMI type numbers that we see come out. And I just feel like right now that the rate hike is on. I've been saying that every day to you folks since the last time that they raised rates. I said next meeting they'll do it. And in fact, I argue they have to. And this will become more of a dialogue, and maybe you'll get tired of hearing me say it. But the results of what I think is going to happen here is that they're going to raise one more time, and then they'll skip a meeting, and then maybe year end, depending on what kind of metrics come out, unless we start to see crude oil run away. We saw the Saudis keep their cuts on until year end. Like I said, they want to squeeze. I'm not sure they like Brandon all that much, and they're just squeezing them. It's getting harder and harder. I mean, the SPR is blowing out, right? So the administration is going to have a really tough time trying to come up with some kind of scenario to get gas prices down, especially at this time. Supposedly, I'm air quoting, that we're through the summer driving season, right? Kids are going back in school. All this not supposed to be looking like this, where we're printing at the highs again on gas prices. So it's going to be a really interesting story. I think in discussing something on a conference call I was on today is I believe that the Fed's looking at different metrics than what they show us. They have much more access to numbers and other types of surveys and other events that they do internally. If you think they just wait for these numbers to come out, like Jay Powell tells you, like, oh, we're waiting for the PCI to come out, they already know all these numbers. They have all their internal estimates. If they relied on those other agencies to run the show, they'd be in big trouble, because most of the books are, you see seasonally adjusted. You see a lot of things, terminology like that. All the numbers that come out are pretty bogus, okay, that we react to, including these ISM numbers. They're not as bad. We'll just say they maybe have a little more accuracy because they come from a private agency, not through the government. But all of the government numbers, folks, these numbers are about as bogus, and the books are cooked. What do you actually think seasonally adjusted means? I've said this for a lot of years. That means that they are adjusted to their agenda, and I believe that strongly. And so I know that the Fed is looking at some different numbers, and I think they're seeing things. I mean, all of us would argue not seeing any changes at the pump. Food prices really maybe have moderated, but not really. What we're seeing there is elevated prices. I mean, just look at what you're paying for groceries and things like that. These numbers aren't really changing. There's some metrics on those government reports, seasonally adjusted, and books cooked, that are telling you that things are looking a lot better. And that's to help market expectations and affect market sentiment from the standpoint of inflationary expectations. But in the end, the numbers aren't exactly what you're being told, and I think everybody already knows that. Sorry to go on that little sidebar there, but yesterday, so it felt pretty bad there for a while. The S&P finished down 0.7, NASDAQ down 1.06, Russell down 0.33, even though the banks got hammered roughly for about 2% across the regional and the community banks, and it was not a really pretty day, but that had more to do with the increase in yields that we're seeing on the 10-year and the like. So fair amount to talk about tonight. I think I'll be able to get through this broadcast tonight fairly quick. And before we get into that, I just want to tell you, really appreciate, it's amazing. Sales are continuing with the indicators. So if you haven't got them, get them, because they're going to be essential when I do the live symposium sometime next month. I'll announce the date fairly soon so you folks can plan and get some space open in your schedule to be at that. But that's going to be essential. So go to kindlereport.com/indicators, get the indicators, and then when it comes time for the symposium, it's going to be packaged. The tickets are an exclusive ticket to come in there if you have the indicators, because it's not going to be very worthy if you don't have them. So anyway, thanks again for listening to that. Let's get into the database. And remember, we're 1 day removed from the actual output. I'll discuss that as well. All right, so here we go. This is what I couldn't see yesterday, is we had 1,333 sells, only 307 buys, and I'm pretty sure we're going to be under 42%. I was amazed how fast we came off those low numbers. We came off, about 16, 18% bullish, all the way up to 47. I've just rocketed off of there, and I think we're going to continue to see a lot of volatility in this database. So this in itself, I'm anxious to see the numbers. I'll cover them tomorrow, but this in itself is going to put a little bit of a fly in the ointment on any big giant rebound. So this is going to tell us that we're most likely, maybe we see a punch back above 4,500. I'll discuss that in the technicals here in just a minute. But for the most part, there's not any big screaming turnaround, I don't believe, coming at any time. And we have the Fed meeting. We have a whole bunch of stuff that's hanging over the markets from that standpoint. And I think that there's not going to be a lot of crazy upside volatility. And I think the downside is really, really close. I think the action that we got today, it was a bit of a blow off. There was a time that it looked like we were getting somewhat of panic selling coming in. And then that's when the market dried up and we saw the turnabout of the markets at least be able to claw back 20 handles or so. As far as the database goes, my expectation for tonight's run is I think it could be fairly ugly because there was a fair amount of volatility. We ended up closing down, I think, on a lot of stocks. I just went through a spectrum of stuff. Like I said, I wish I had the metrics so I could actually report. That's why I used to do this broadcast at 9 p.m. every night. It just doesn't work for me to do that any longer at that time of night. It was great having those numbers, and I miss it. I'm sorry if I comment on this every day, but it just feels very disabling. But the point is that we should see this number back under probably 30, maybe 37, as low as 32. We could see a big hit on this database. And the numbers to watch now as we go forward is going to be around 28%. If we can't hold 28, then there's going to be a problem, and we could still see some further numbers on the downside. But it doesn't appear, at least my anticipation is that it doesn't appear that will be the case. Let's go ahead and get into the technicals on the S&P. So here's the hourly chart as we always start here. Algos are suggesting maybe we can get a little more of a rebound. At the moment, we're still negative a little bit, down 3 1/4 on the session, but it looks like we should be able to start to rally back in. And I'll show you something, and it was kind of a miss, even though I was telling you that there was likely to be some downside potentially into Thursday. I think we did it all in one day. I'll talk about that from the standpoint of what's going on. But the bottom line is that we did see a pretty big turnaround, and I'm going to try to blow this up and draw it in because I think it's in. This is those of you who have the indicator. You see this red line that's coming through. It's right at the 90. I believe it's. Let me get the exact number. It's 4496.08. And that's this number right here. When we penetrated through that, and it was right at that 94, I talked about the cluster of numbers around that level yesterday and how important that level was going to be. And if we took that out, then we were going to see at least a 60 handle. And I laid out some pretty good numbers last night as far as what was likely to occur if we got that break. And we did get the break. And it was a swift break after when we got it. Markets accelerated down. In fact, I want to blow this up a little bit and drag it over here. You can see that at very first hour, we actually ended up getting an RTX buy, but we had 2 more hours down, printed all the way to, I said RTX, STX on this. So we got STX buy, but we still had 2 hours down. Then we got this reversal bar, and this is exactly where it was. And if you were looking at the algos at the time, as they were printing that low, the algos were projecting that we're going to get a rebound into the close, which we got. We got 3 hours from there on the upside, and we managed to print all the way to 73.25. I thought there was a possibility during that time, if you're watching the 5-minute chart, there was a possibility to trade up to around the 80, 84 handle. We just didn't have enough left, and sellers started to come back in that last half hour, 20 minutes. So we definitely saw some backfilling there after that rally. But that was pretty impressive. If we just look at the hourly chart for another minute or so, what you're going to see is that this pattern is setting up, and we're starting to get a contraction of volatility. And I've talked to you about, I don't know how many times, but this is a lesson using market grid and understanding on any length of chart, whether it's a 1 minute, 5 minute, any of these. When you get this, what I call the volatility expansion, when you start to see the ranges of expectation and each next bar start to expand, that's when you get the volatility expansion. And then once that's over, you usually trade right back into the pattern, and then you get the opposite, where it takes between, no matter what the bar chart is, folks, this little education is it takes between around 3 to 5 bars to start to see the volatility contraction, and then you want to watch for the next setup, which is is basically where we are right now. Okay, and what we're seeing is you can see that the market grid is pointing down above and up below, and we've got some interesting things happening here. It looks like PPM1 in the next couple hours will turn up. So all that's telling us is that it's possible to trade up toward the top of the grid. Unfortunately, we won't. Let me see what time it is. Actually, we will get an update on this. So if you've got the indicator and you have the hourly chart up, watch for this update that's coming in 23 minutes. And once we get there, if it turns back up, we should channel on our way back up towards this 21 period moving average, but it is declining as well. And that number right now is at 44.96 is that a pivot number. I'm just trying to get the value here. It is 44.85. 83, so it's dropping 2 handles per hour, so somewhere between 78 and 75 should be some resistance. And then as we come in closer to the London Open in several hours from now, it's about almost 8 hours, we should start to see the market potentially trading back up towards a 200-hour moving average, which is still rising and is roughly up at around 44.88. And this is one other thing I want to point out. And when the market gets too far above or below the 200 period moving average, it gets really out of balance. And it's amazing. I've said this before, and I never used the 200. I always used the 40 week moving average, which is a similar calculation to the 200. But after using the 200, especially on some of these intraday charts, it is actually acts as the markets will get maybe a standard D below or above, and they want to pull back to that average. So it looks to me that there is some potential movement where we want to get back into that range, and that range is around 44.90, back to that pivot number 44.94. Let's go ahead to the dailies and take a look there. This sets up pretty interesting, actually. Just expanding this chart out just a little bit. I mentioned these upward fib targets, and I know there's probably many of you out there, oh, it's over, market's going down now. It's probably not going down. And this is what I was setting up last night, that Thursday, this should be the final bit of weakness, and we should see a rally as we come into Friday and trade back into this pattern. But I don't think this is what I'm trying to describe here. I do not think it's going to be some giant rally. I think we're going to see the database back up. I think we're going to see another, probably tomorrow maybe will be muted. Maybe we can trade up a little bit. We'll look at the market grid here in a minute. But you also want to, the miss that I talked about earlier is that one of the things that happens when the market grid gets wide and then it narrows and it's been going up, that typically tells us there's some downside action. And that's why I was talking about 1 to 2 days of downside action. And if we took out that 44.94 level, that we would see something down in this 50 handle. So we got to 47, and that was the STX yesterday. Let me just bring that number up here. STX was 44.68 here on the daily. So we get down below there. We closed at right at 44.68. So you could argue there was an STX buy signal and potentially going sideways. And that's what the hourly chart is suggesting. And we should start to come back in. But from there, one of the things that's probably the most interesting, I touched on this yesterday, is that I think that the PPM2 is about to turn up, and it suggests we're going to see some decent acceleration to the upside. And really what it's going to do is supply some very solid support, and that's at the 21-day moving average. Just a simple average. Right now, 44.57 is that number. So we poked under it just a little bit, but I think we stay under that number, and it looks like we actually turned up for Thursday's action, and we should see this thing rebound, and I think we get sandwiched in between the moving averages. I talk about this pattern a lot. This is getting the 21 being the lowest average in the pattern, and expecting possibility of trading back up. The 10 is actually upsloping. It's at 0.04 positive, so it's not like in trend mode or anything, but it is suggesting that we could trade up as far back into 45.05, something like that. So let's look at the market grid. So market grid for tomorrow, S1 is 44.61. Let me get the range so far tonight. 44.68, 70. So a pretty tight range at the moment. But let's go ahead and take a look at this market grid number. So the market grid number is 61 is S1. R2 is right at 44.93, basically that 94 pivot. And R3 is 45.04, which puts us up to about that area where I was just talking about on the 40-period moving average at 45.05. So nothing big here that I see, but we should stabilize. So let's talk about critical levels that are going to be interesting to watch. I'm also going to bring up the weekly chart here and just set this up as well. So what we're looking at is you just got the numbers in the daily chart. Algos are suggesting that on Friday it's going to turn up, and it looks like potentially running into Monday. So Sunday night coming into Monday, we should see some potential further strength. Nothing, like I said, nothing big rally. I'm not bullish. I'm just saying we're going to stabilize here in that 21 period moving average because PPM 2 is actually starting to accelerate. That is going to be the key number to watch, and we should be able to close above it. Now, it's not in trend mode. It's actually negative by 0.05. So in a couple sessions here, we come into Monday. Let me just get an estimate here of this price. We're actually positive by 0.404. So that's just not really meaning much of anything other than my expectation is that there will trade within those ranges. We'll even spike slightly below and rebound, and then on the upper side, we're going to see that 40-period moving average at least be a cap for Thursday, maybe Friday. I'll set this up the best I can tomorrow night, but I just want you to understand what's happening here is probably some consolidation. I will say this again, I do not believe that this ISM number and these numbers that came out yesterday were material in any way. What I am saying is that the algos responded to them and they were able to drive this market down today, but there's not going to be any follow through. And tomorrow, like I said, we've got claims. We have really pretty benign reports. We got, claims. And the one thing I didn't mention, bad on me, is productivity also comes out tomorrow. It's expected to be 3.7%. So that could be, maybe that comes out, that'll be more of a positive number. And I went on the other day talking about the importance of that productivity number. So I didn't miss that on my notes. I apologize for that. But the bottom line is we should see some stability. And the algos on PPM 1, if you look here, all they're doing is telling us that we've got a bunch of sideways maintenance. But you can look at the WATARs, which WTAR is the WaveTech auto regression SMA projections, and you see we have an upslope trying to emerge again as we come into mid to late September and beyond. So I've been talking about one of the trigger points I'll be watching for is around that second, third week. Basically, the Fed meeting is going to really give us some guidance going forward. And I actually think that even if the Fed, and I'll talk about this in a minute in the treasuries, but even if the Fed raises rates, it's not going to have any big material effect on what's going on in the economy. I think it's obviously starting to be built in again. Let's look at the weekly, and I'll finally get done with this S&P. And the weekly, we're really within the range. And this was the numbers that I mentioned yesterday on the weekly market grid. S2 was 44.51. If you remember, I was talking about that's probably your extreme S2 for the week. We printed 47, got a decent bounce, about 20 handle bounce. We're trading right now at 69, so we're still up at that 20 handle roughly. And I laid everything out on the hourly and dailies. But what you'll see is, once again, these moving averages are likely to be very good support. There is a pivot number in the middle of there, and I'm just double checking this number. It's 43.62. So that's the two things to talk about on that number on the weekly is if we printed 43.62, that's probably seriously your buy the dip number. I mentioned last night that 44.50 was going to be a buy the dip number, and it was a pretty good one today. If we did break through that 43 handle number, that would be more material. But it looks to me that we're probably never going to get close to that, not at the moment. But I've warned you folks before, if I mention a number, it tends to get hit. The algos on the weekly are just suggesting stability with a somewhat of a positive. PPM1 is actually negative on the 10, so it's actually declining. The big number is PPM2 here on these numbers, and PPM that number is at 43.97. So that would suggest a possibility of a print to the 4,400 level. But if we look at this number just a little closer, and let me give you this number. Yeah, we're going to be, the 21-week average is coming up at about 20, just looking at these numbers, about 15 handles per week. So that'll put us up at 43.90, and then at the low 44 handle. Typically, when we get to that level, the fact that the moving average value is there does not mean that it will be hit. It's just there. It has an upward slope. We're in trend mode, 0.33 plus, and the algos are suggesting the stability to a slight building on that trend that's underlying here. So this is expectations, and the big thing, which I'll discuss tomorrow, it will be how this action impacts the intermediate models, which I'll discuss in detail on Sunday night. So let's finally move on to the NASDAQ here. All right, same pattern. Looks like this will probably be the bottom of this action. And like I said, the key numbers here, we do have a big pivot on the NASDAQ to watch out for. And that is here at this 14,947. I'm just trying to find this exact number here. Yeah, 14,980 that's your drop dead number. Most likely that's your buy the dip number if we get to an extreme. I don't think we get there. Look at, this is the daily. Look at the acceleration that's coming in PPM2, and we are not at trend mode on any of these, but the key level I think to watch is if we can start to trade a little bit above this 15,400 number. And right now we're trading 15,391. So we're really close to that. We start to get a couple closes under 15,400, then we'll start to see what you're seeing, the projections on the screen. Now, if somehow we reverse, take down, and get down below the 21 period moving average, which is also the dominant average in this pattern, that's 15,175. If we printed down below that, then that would be detrimental and probably tell you there's some potential more downside. But for right now, all of these markets are kind of locked into this sideways range that I set up between the lowest average in the pattern, which is right now the 21 day, same thing on the S&P, and the 40 on the upside, where it's different here on the NASDAQ. The 40 is where we're trading right now. So just seeing closes, like I said, over 15.4, that's going to be enough to actually start to see this acceleration. And you should know by now, if you watch this channel or have the indicators, that what's being all the grayed out lines after the solid reds, white, and cyan, all those colors, those are the projected values of what's expected for the PPMs to do. And the same thing with the dotted lines on the moving averages. So we still see this moderately upward slope here. And I can tell you, I didn't go off on the real estate. We didn't go off on the real. All right, I'm getting some internet glitches here. All right, sorry about that, folks. Hopefully we still have conductivity. Looks like we do. But yeah, so all of this stuff, what I'm talking about here, is really setting up a neutral trend. It's not up or down, so don't say Bob's bullish or bearish. Really somewhat neutral. The downside should be muted, as I talked about yesterday, down to the numbers that we printed. And the on the upside, I still think there's based on the slope of the trends, the PPMs, and all the stuff that we have, there's still a slight upward bias. It's just not one of these robust, screaming markets. I know the expectations are even big numbers and down, but what we're seeing here is a lot of choppiness, and we saw that all the way through August, actually. And we can go back for a ways, if you remember, and just talking about this, a daily chart. If we go to weekly here, this even has a much better trend formation, and where PPM2 here is up at 0.71. So this is weekly NASDAQ, and if we look back at the 21 period moving average, the low was 14,609. That moving average at that time was 14,447. So this is what I was talking about earlier. Even though the moving average is there, we usually will come within a market grid expectations. Let's take a look at that for that week. And we're looking at, here's S2 14,852, 723 was, we got right down to probably close to that 723 number. I have to go back and forth, I apologize. Yeah, so we got down 14,744. So whenever you have these moving averages lying around like this and have these upslopes and have this, look at the market grid, and typically S2, S3 will be the extremes of that move. It could be, full on STX, but for the most part, that's how I measure what the expectations are going to be. And then if you're trading that number, you should be able to use some hourly charts, some other types of techniques to actually show you exactly what is going on. And I am actually putting some videos that will be available for you that bought the indicators, where all the video training videos are. There's going to be some updated videos coming there fairly soon, and that's going to show you some of these setups and talk a little more in depth of these things that I basically show you every night, but we should be able to break it up pretty good. Yeah, somebody's asking why my numbers might be different. It may be the contract that I'm using. This is a continuous contract. maybe something like that. If you bring up just the front month, it's probably different. So these calculations are, I'm using the, let me just put this up here real quick. Yeah, I'm using just the E-mini forward-looking contract. So if you put in NQ and the month, you're probably going to get different numbers. It's all about data. We could get into that type of range, and I suspect, I haven't looked at the VIX for a while on the S&P, but there's probably signs of that, as well as that we're not seeing any big volatility up there. And matter of fact, I'll bring up the VIX here in a minute. I hate to mention it and not look at it, so I give you an opinion on there. But it looks sideways here, nothing big. We do have downward and upward targets, and the downward targets suggest that we could get back down to this pivot zone level, which is around at 1874 levels, something like that. I don't see that as a realistic possibility at the moment. Everything looks stable to me on all these indexes. I'll bring something up for those of you who have the indicators. There was these Fibonacci targets that came into play literally the day before the spike. And this is weekly, by the way. This is the week before. I'll go to daily here in a second. But the projections were suggesting that we go up to 32 handle. We got up to, let me just get the number here. We did get up to 30.8. Let's go to daily. Just take a look at that. So the same thing. It looks like there's still some potential upside here on the VIX here, but there's resistance right here around 1581, and we've got the support and pivots down here at 1280. So everything looks stable here, folks. I don't see any crazy anything being forecasted by anything that we're watching here. Yeah, I don't. So the folks that are talking about the difference, where are you located? Because I've been through this before with some of the international connections as well. So anyway, let me know where you are. If you have different numbers, I'm just kind of curious about that as well. All right, so let's move on and let's get to the treasuries. So daily treasuries, here we are. We were negative. We did get that turnaround being signaled. We got it. We got that reversal on Friday, and we followed through yesterday. And now we're just trading in this upward narrow trend on the market grid. And we do have, and I mentioned this number before, we've got valid fib targets up here for a 4.43 on the 10-year. I don't know that we'll get to there. Let's take a look at the weekly. And weekly is really looking like this is kind of the final hurrah, at least up into the potential of the fib target 2. If we go back on this, going all the way back to May of this year, the fib targets on the upside was for a move to 401, 429, basically 429.9, which is 430, and 4.47. So we printed just above that fib target 2. Fib target 3 is a bit higher at 4.47. I think it's possible, if depending on how we finish this week, that we could get the market grid to turn up. We still have an upward slope for another couple of weeks. This is weekly 10-year. We still have an upward slope. So we could see more upside, just like what we saw in the crude oil. take a look at the, we haven't looked at this in a couple sessions. Let's go ahead and look at the 2-year. And 2 years just kind of climbing along that. This is the weekly, the 10-week moving average. It's the number I've mentioned before. That support zone right now is 490. We closed at the 502. We printed right at 490, 4.895. So that should be a continuing be support line as we come in. And this is a weekly chart that we're looking at. So that should be a good number all the way into the Fed meeting. We should be hovering, well, worst case, down to the 21 period moving average, which is around the 470 level, and staying right around 490, maybe a little bit over 5 from that standpoint. All right, let's go to crude. So crude, these consolidation patterns coming into December. And of course, this was SPR selling. Well, they ran out of SPR, basically. They sell anymore, there'll be none. And then but you can see here, this is a weekly chart. And I talked about this. There's still that upward slope all the way into November. And like I said, it's not that typical if you're looking seasonally for this to be happening from that standpoint, but it is happening. And it looks like we have a continuation of this pattern likely. We are seeing peak values in PPM1, but PPM2 still got some expansion all the way into that late October, early November. So there's likely to be more of a bias to the upside there as we go, as we come into that period of time. And they're even saying, it's interesting, on the way at the bottom here, on the Waytech 200, we're seeing at the beginning of the year, the 200 wants to bounce, which tells us that we're probably going to see substantial a move up, where we probably stay above the 40 period moving average in here. And it's kind of interesting. There's a bump and then a decline as we come in. All of this stuff starts to fade as we get closer and closer, as we coming into close to election time, as we because there's going to be a lot of influences out there from that standpoint on these markets. But I'll probably just stick with this analysis. Let's go to daily. Let's do it. So daily still got some upward bias. Don't see a penetration till around the second, third week, around Fed time. But even then, the rolling over and the stability looks like it's going to stay in play. And we could print up, into the 90 handle here on the West Texas stuff. We always say printing at the 90 handle. So just know that there's still an upward bias here on crude, and it doesn't look like it wants to go away anytime soon. All right, so it's time to you talk about Peter Schiff's disappointment that he's going to have. Although he'll tell you that if this price decline, that this is a great time to buy. Just buy. Because it's going to go up. But gold is starting to fade, and it's looking a little more serious. And I'm hoping on some of these videos that I'm going to be putting out, is when you see the algos on the WTRs, I got the 10, 21, 40, and the 200. But when you see the algos projecting prices underneath the 200, we usually end up going there. and it's pretty significant. So all of a sudden, 1880, 1840, those numbers are going to come into play as we come into October. Then it looks like the algos want to turn around at some stage, set up some kind of bottom coming into year end. But it really doesn't, it looks like there's going to be some weakness. The only thing that's likely to save the market in the short term is going to be this 200-day moving average, which is flowing through here right now at 1923. But there is also a pivot, and this is the most important number on this page. Let me get the exact number for you. It's 1933.10. So we close under that as we come into the end of the week, and we're going to challenge the 200-day, which is 1923. We get below that, and you start to look at, I'll show you on the daily, on the weekly, there's some downward projections that are in play here. There's Fibonacci projection, and I've talked about this a fair amount at 19, low target 1826. That's also the 200-week moving average at 1810. So that's most likely your target. That in itself will make for a very bad time for Mr. Schiff. All right, so I'm sticking here with the weekly Bitcoin. It's interesting because even in spite of the weakness in the equities today, we managed to hang in on these numbers at 25.5 numbers, just solid. I went through a lot of detail yesterday. PPM3 is up at a 0.85, still suggesting that we're going to hold there. That's also fib target 1, 25.539. These are really critical numbers. You break through there, then you could end up, and I covered this yesterday, but you could easily end up printing down into some of the market grid numbers on the weekly. And just to bring that up, they're below the 25.5, really 24.5, so like 1,000 below that, 23.850, and 23.2. So there could be a move down, but right now, everything's trying to set up that we're going to hold this number. And I'm pretty impressed. I think one of the positive things that's happening here with Bitcoin in itself is that it's breaking away maybe, and I've talked about this before, where sometimes it looks like it is an alternative asset and it's not doing anything other than being that alternative asset. It's not correlated with the NASDAQ. It's not any of that stuff. It's not really the possibility there. So, I just see a couple of requests. I'll tell you what I'll do. I will do, because I believe Apple was a big player today in this sell-off, and I'll do Apple and Tesla to finish off the show tonight, and then we'll go and then we'll call it quits and move on. So let's take a look at let's start with Tesla. This is a weekly. So we're back into that resistance zone. I covered this last week, actually, and we printed up all the way to RTX, which is 259.98. Let me get these prices up here. This is last week now, 261.18. We backed off a little bit. That downward slope of this 10 is pretty powerful right now. It's a minus 0.38. And I talked about we're probably going to stay at that level and probably trade back down, potentially down toward this 230 level, something like that. Let me get the 21 period moving average is 228. So we'll round it out 230. We should peak out right in this level, and it looks like there's some potential downside, but this 21 is pretty solid. You're looking at 1.41 ppm value, and that tells you that the probabilities of Tesla closing under the value of that SMA 21 right now is about 10%. And you see here on the stack, it shows 90% probability that will hold. So it is exactly only a 10% probability it will go through. And so that's a huge number. So that's your buy the dip number around that level, which is 230, 228. And the resistance right now, right now it's about a 40% chance that you can get above and stay above the 10. I don't see that coming into play, but it looks like we should get some softness. Let's take a quick look at the daily, and we'll do Apple and call it quits. Daily has a huge number up here. This red dotted up here, that is your pivot level right there. That's right now 268.30. That's probably your peak value. You do have also some moving average, the 40-period moving average. Just trying to get value minus 0.17, minus 0.25 on PPM2, and PPM1 is actually a plus. So you see, PPM1 being a plus 0.76 told you that we should bounce off the 10-period moving average. And so this is a much tighter pattern. And if you look at, this is today's action, right? This is daily. So today's action showed a low of 245, and the low of the SMA 10 was 246.99. So bounced off of there. This is a kind of a funny configuration where you're probably going to trade within the market grid, and there is a secondary pivot around 259 here, 259.60. So that's probably your cap. You probably get a little sideways, maybe some downside, but it looks like consolidation for right now on from a daily viewpoint. All right, let's do Apple, and we'll call it quit. Right at 1 hour, so this will work out perfect. So Apple, pretty ugly day down. So we're looking at PPM1 is cutting through its first derivative. So we also cut through this red dotted line, which is the pivot. So if we had covered this yesterday, or you have the indicators, you watch for these dots that continue to calculate. Those are pivots. So that number was, let me get this number out for you, 185.87. So a penetration of that signal this move down. We actually were able to trade through the 10-period moving average, even though it's at a 0.31. So you look for this thing to kind of rebound and probably set up a sideways range around that pivot. That's a perfect setup, because it's going to trade in and about around and use the market grid as the number there from that standpoint. The market grid numbers right now, if we look at, we don't have tomorrow's calculation, but that's going to put us, I would just use those numbers I just talked about, the 185 plus or minus down to the 10-period moving average, and the potential going up for the grid. So those of you that have the grid, have the indicators tomorrow in the first tick of trading, you'll be able to see those values. All right, let's go to weekly, and we're going to call it quits there. So weekly, interesting. We came down to the 21-period moving average. Let me fix this. So 21 is in trend mode at 0.46. Probabilities for it to hold the 21 is 64%. And you can see the low was 181.47, and that value is 181.59. So that is exactly where it held. We should continue. We should get a bounce out of here. Just come back into this range. Like I said, this is valid. So far this week, if we look at market grid in itself, as far as expectations for Apple, let's just take a look here. Let me get the range. So 190 will round off 190 to 181. We look at the market grid. 191 was R1, 91.58, and S1 is 187. So I would suspect to stay in that range here. We're actually coming really close to RTX at 180.49. And so what was the last trade? I have to go back and forth. Yeah, so we basically are coming right into that STX level, S3, 8260, 8049. So we're at the extreme of the week, and we do have an upward slope here. And it looks like this is the weekly, that next week, similar, which it should, right, look like the indexes. So the NASDAQ and the S&P are all showing weekly potential turn up from that standpoint. So that tells us we should bounce, and then probably the worst of what we're seeing here has been experienced, at least I'm expecting, like I said, throughout this broadcast tonight, just talking about all the indexes. We're really on support levels. I don't know that there's anything material that's going to drive this out. And in fact, as I said, I don't believe that even the news that came out yesterday was material, other than the algos were able to drive it down with this. Fed's going to raise interest rates on the next meeting. Okay, folks, that's going to do it here. I appreciate everybody showing up and watching the videos every night. And make sure you subscribe, hit the like button, and if you don't have the indicators, get them at kendallreport.com/indicators, and you get signed up. And once again, I think we've got email going out. If you did not buy them, but you bought the previous suite, there is a customer appreciation coupon that you can get. So you can still get that deep discount. So go ahead and do that as well. But make sure there will be a deep discount for the symposium as well if you bought the indicators. All that will be explained here fairly soon when I get the format laid out and how long it's going to take to get through this information. It's basically going to be like a live masterclass. And I'm putting a lot of work into this. I'm hoping that it will be able to be done by the end of October. It could be November, but we'll just see it. There's a lot of work. Every time I go through an element, I find something else that you folks need to know to become experts in all this stuff. So that's the plan. Anyway, thank you everyone for watching. Appreciate it. And I will see you tomorrow night, same time. Those of you who have WaveTech, check out the database. I think we're going to see a reasonable hit. See you later. Yeah, it's going to be a live stream of some sort, but it'll be private. It will be live streamed, but it will be a private event. You have to be subscribed.